Good morning. Mackenzie Johnston with Cattle News Central, bringing you your March 29th cattle industry headlines. Sponsored by Sandhills Beef Company of Mullen, Nebraska. Eat like a rancher. America first means buying directly from the producer. Be the change. To learn about everything Sandhills Beef Company has to offer, head on over to their website, www.sandhillsbeefco.com. Last week, we talked about the reintroduction of the 5014 legislation introduced by Senator Tester of Montana and Senator Grassley of Iowa. And last week, NCBA came forward saying that the organization will continue to work alongside its affiliates, Congress, and USDA to increase price discovery and improve the business climate for producers all throughout the United States. But with that being said, the 5014 legislation misses the mark, and NCBA believes a one-size-fits-all government mandate rarely achieves its intended goal. Instead of the 5014 legislation, NCBA supports a voluntary approach to increase negotiated cash trade. I think it's fair to say when you look at our markets, a voluntary approach just is not the ticket to increase negotiated cash trade. But if a voluntary approach does not work, NCBA says that it will then move towards a legislative solution that more closely resembles Senator Fisher's Cattle Market Transparency Act. Going forward, NCBA will continue to work toward a more level playing field for producers, and they invite Senator Grassley and Senator Tester to join the majority of stakeholders in reaching a collaborative solution, said NCBA Vice President of Government Affairs Ethan Lane. Quite a bold statement. According to Yahoo Finance, in 2020, JBS South America beat earnings estimates with record cash flow, which has resulted in the world's largest meat suppliers suggesting record dividends and an acquisition-fueled expansion. According to Chief Financial Officer Guilherme Cavalcante, JBS still has room to grow through acquisitions and organically. The company plans to focus on expanding their processed food options in the regions where they already have production. JBS will continue to actively seek acquisition opportunities to further expand, but the assets have to make strategic sense and be the right price, said Chief Executive Officer Gilberto Tomazoni. Last year, JBS spent approximately $354 million on acquisitions and had an increase of 74% in dividend payouts. Moving into 2021, the company plans to boost capital spending by as much as 48%, mostly in expansion projects and modernization of plants. JBS's 2020 fourth quarter earnings before interest, taxes, depreciation, and amortization came in at $1.2 billion, according to Bloomberg. Looks like JBS is doing just fine. Drovers has reported that last week, average feed yard margins fell below the break-even point for the first time this year, with calculated losses of about $1 per head. During the same week, back in 2020, and if you remember back in 2020 for last week, that's when the virus was really starting to impact our industry. We were starting to see some plant shutdowns and even some plants some plants slowing their chain speeds. So last year, cattle feeders were losing about $90 per head, according to the Sterling Beef Profit Tracker. Hog producers, on the other hand, right now are experiencing a profitable rally, with average profits falling right around $56 per head. Beef packer margins declined $5 per head compared to the week before, to an average of $320 per head. With packers experiencing ample profits, the packer feeder margin spread increased $12 from the week before to $321 per head. Last year, during the same time period, beef packers were making profits of $490 per head. And again, that's when the virus was really starting to impact our industry. That is all I have for news for you guys this morning. I hope you all had a wonderful weekend. What a glorious week it is. It is Easter week. Have yourself a great Monday, and I'll see you guys tomorrow morning.